Hello again. One of the expected themes of the year is a move by investors from bonds to equities, but has it materialised yet? Well, I've been speaking to Jonathan Roy from London Stone Securities. So obviously we've started 2013 with a lot of momentum. What factors are you looking at to sustain that movement?
I mean, the momentum technically is obviously a big factor, and I think that will continue to push us higher. A lack of a catalyst to the downside as well. I think there's a lot of investors that have been sitting on the sideline for a while. They've watched a number of different economic events unfold. There has been a number of potential crises as well. That seems to be behind us now. They're obviously looking a little bit more positively at the equity markets, investing. There's a lot of good value stocks out there, top quality blue chip stocks that I think are particularly attractive to investors that maybe in the last couple of years have been focusing on bonds. That may be a risky situation to be in at the moment, and looking to do that switch over. I think that flow of equity is definitely going to push us higher.
Because lots of people are saying that we're going to see this movement from bonds to equities, but are you seeing the volumes?
The volume's definitely going into mutual funds. We're seeing that. I mean, we are at all-time, pretty much all-time lows on the equity sort of trading side of things. So I think it can only move up from here. People that are moving to that switch, they're basically looking for a better yield, and the valuation, particularly on European stocks, is particularly low at the moment. Yeah.
Just to focus on the bond market, if investors do move from bonds to equities, what happens to the bond market? Do the yields start to creep up?
They will start to creep up. Those people that are still in it will start to see a loss on the actual position there. The bonds will go up, and what you're starting to see there is an overall loss on the position, and we might see a flight, especially if interest starts to rise, interest rates, then we could see a big flight into equities.
One of the positive stories for the beginning of this year has been China, and it seems that their economy is back on track, as it were.
I mean, I don't think we're going to get back to the heyday where we were a number of years ago, but we have started to see some positive economic figures coming out. Last week we did see an increase quarter on quarter of growth. That's what probably for the last sort of 2 years we haven't seen that. Also some good export figures.
So we've covered the positive aspects, but what risks remain out there?
Well, one that's obviously very prominent at the moment is the US debt situation. We've got a number of events in March that need to be eyed very carefully. We've had a number of meetings over in the US in the last few days. They've again kicked the can down the road. They haven't come to a resolution. I think to some extent investors have become numb to the political wranglings over there, and unless we get to a situation where it's on our doorstep, it's going to be happening in the next couple of days, I think investors will remain pretty resilient to it.
And generally speaking, throughout this year, do you expect the upward momentum to be maintained?
Yeah, I think we're due for a correction at some point, but I think, as I said earlier, a lot of the bad risks, particularly bad risks, are behind us. Once that's off the table, there's going to be a lot of people that are looking for investments. They've got a lot of cash on their portfolios. So I do think we'll probably finish the year higher than where we started.
Well, Jonathan Roy speaking to me there. Stay tuned to Dukascopy TV for more quality interviews, but for now, goodbye.